If you're running a small fleet, chances are you've asked at some point, should my drivers be paid W-2 or 1099? It seems simple, but make the wrong move here, and you could end up with IRS trouble, surprise tax bills, and major driver turnover. In this episode, I'll break down what the rules actually say, what we've seen in the real world, and how to make the right call for your business. Welcome to Driven for Success. We're going to start with what's the difference between W-2 and 1099? A quick explanation is something like this. W-2 is for employees, 1099 is for contractors. Okay, easy enough. But what does that mean? Well, employees have rights. Employees get unemployment insurance, things like that. They get workers' comp insurance, all those kinds of things. Discrimination laws, all those kinds of things apply. But with the 1099, they're just vendors. They're like your office supply company, or the people you buy diesel from. And so those guys are all vendors. And so you don't have all of those kinds of employee protections there. Some of the big things too is like who handles things like with a W-2 person, you withhold taxes. You withhold federal income tax in their paycheck. You withhold Social Security and Medicare, also known as FICA. You withhold state and local income tax if that's necessary. Some states have other withholdings like unemployment within the state, or maybe some Family and Medical Leave Act places, things like that. With a 1099, you don't withhold anything unless directed to by their W-9. If the W-9 says they're subject to backup withholding, then you have to withhold. It's a pain. I hope you never run into that. Here's the big problem. The big problem is if you classify somebody as a 1099 and they're supposed to be W-2, you're on the hook for all those taxes that should have been paid. That's going to be a big deal. You don't want to have any part of that. So let's run through that a minute. What are some of these penalties you're going to get? Well, you're going to have the tax that should have been paid. You're going to owe that, even though you failed to collect it from the employee. You're going to owe a failure to file penalty if you never filed a form, because you're like, why do I have to file a form? I don't need to fill out 941s, which is a reconciliation of the W-2 taxes withheld. If you don't file it, there's a failure to file penalty, which is going to be about 25% of the tax due and couldn't be higher. You're going to have a failure to pay penalty. That's going to be at least that much. You're going to have possible fraud issues there as well. You're also going to owe your state and the IRS for unemployment taxes and all the penalties that go with that. You're going to end up owing more than double the tax you would have paid and then some. And you're also going to be in hot water with all these guys for a long time. I don't know any trucking company that wants to be on the IRS or the state government's radar. They have enough fun with DOT. Let's not bring the IRS and the state departments of revenue into this. It wouldn't be any fun. And so you might wonder, how does this stuff come up? Well, it comes up because there's a couple of ways. One of them is the driver files for unemployment. You let go a bad driver because they're a bad driver, right? You should be able to do that, and you can. You run the risk of having to defend it to the unemployment people, which is a whole other thing we can talk about later in another episode. But if you paid them 1099 and they were supposed to be W-2, that's when the state's going to get involved. They're going to come to you and say, hey, Bill Smith went to file unemployment. We need his wage records and things from you. And you're going to be like, no. He's 1099. And they're going to go back to Bill and say, hey, Bill, Jones Trucking over there says that you're 1099 and you were a vendor. And Bill's going to suddenly have gotten smart about all these things. And he's going to say, well, let's take a look at this. And he's going to fill out a form. And then the state's coming back to you and saying, hey, there's some tests here that you failed. And he really should have been an employee. And now we'd like to get into all of your employees' businesses. We'd like to know everybody you 1099 or should have 1099. We want to see your checkbook. That's a bad day. That's a I'm going out of business day. And you're going to be personally liable too. So any money you have squirreled away, they're going to take that too. You don't want any bit of that. Another way this comes up is the driver does their taxes, even if they ask to be 1099. They said to you, I'm only going to work for you if you're 1099. And then you do that for them. Then they fill out their income taxes and realize they owe $15,000 or $20,000 because you've withheld nothing. And they come back to you and go, hey, if you don't want me to turn you in, you got to pay me that 15 grand. So it's kind of extortion-y. I'd say. So that's a bad day. And sometimes it's there, even if you knew the driver and they would never do that to me. But then when they file their taxes, you're dealing with the driver's spouse as well. A spouse doesn't have that deal with you. And you're going to make the driver choose between you and their spouse. Most of the time, you're not going to win that. So it can really happen. A driver can go off, fill out a form, IRS SS8 form. It's about 3 pages, and it's going to go through who does the work, who directs the work, who tracks the hours, whose equipment do you use, can you work for other people, all these kinds of things. And then they're going to, if the driver fills that out, you're going to get notified. Hey, driver filled this out. What do you disagree with? And then they're going to hash it out and look for the truth. And if you're using your truck as the trucking company's truck, and the trucking company pays for the maintenance, and the trucking company tells them where to go, you're probably cooked. You don't want to have that. You're better off just paying them W-2 at that point. One of the biggest objections that we hear, why I'm paying 1099 from people, is, well, everybody else does it. We had a client come to us with a good number of trucks. I don't want to name names or anything, but one of their competitors was offering to make other guys 1099. And they were in a pretty rural part of the country. So it wasn't like being in Detroit or Chicago or Dallas or something where there's a big driver pool. And, that's like, well, everybody else does it. We should do it too. And they ended up not doing it. They ended up turning the people in because that's what you should do. But this everyone else does it is not a defense. It just means that they haven't been caught yet. That's kind of like, you just can't do that. You can't, everyone else does it defense gets you absolutely nowhere. The industry standard is not that strong, because if you look at the big trucking companies, which is what the IRS would do if they were trying to figure out what everybody does, they're going to look at the big companies, and they do have 1099s, but those 1099 people aren't the same as yours. Yours are driving your trucks with your fuel and your maintenance and all those things. So you're going to be out of luck. And let's try and avoid that. So just keep that in mind. Everyone else does it, not a defense. And in fact, I would turn those guys in if I were you, because they're making it, they can haul freight less expensively than you can. They can bid lower than you. And they have an unfair advantage because they're escaping the law. When I say escaping, I mean violating the law. There are times when you can 1099. That is the good news. If you have an owner-operator who owns their own truck and pays for their own fuel, even if they get it through you, but you deduct it from their settlement, and they pay for their own maintenance, and if they have other drivers, they pay for those, you can make a case that they should be 1099. And that's great. I support that, and I think that's the way to go. I will advise you. I'm not your attorney. I do not give out legal advice, all the usual disclaimers, but some states have a problem with this. California in particular had a law called AB 5, Assembly Bill 5, that made that basically illegal. What they said the threshold for whether they're an employee or not is, are they in the same business you are? So if you're a trucking company and that guy drives a truck, he's in the same business you are, he's an employee. I think it's a bad interpretation of the law, but that's not up to me. So the California people, a lot of them just got rid of all their owner operators. Told them to get their own authority and just brokered to them, which is a good way to go too. If they have their own authority, right, they're on their own. They control their own safety records. They choose what they want to do when they want to do it. They don't even work. They don't have to work only for you if they have their own authority. They take their outbound from you, get their inbound from somebody else every once in a while. You're fine. So, so those owner operators can be legit. The big decisions are going to be, whose truck do they use? Who controls the truck? Like who's financially responsible for the truck? The IRS would call it who supplies the equipment, who supplies the tools. They don't mean wrenches. They mean the truck is the tool. And who has a profit motive? What that means is, in trucking terms, that means who saves money, who gets the savings when your truck was run more fuel efficiently. So if you were running a 1,200-mile load and you left early and you said, you know what, I'm going to go 60 miles an hour max the whole way. And fortunately, you're going through like the prairie, so it's not traffic jams and things. And you save fuel. You don't use nearly as much fuel as if you were going 70. Probably save a mile a gallon. Who gets that savings? Does the driver get to put it in their pocket, or does the trucking company put it in their pocket? So if the trucking company gets that savings because they pay for all the fuel expense and don't charge the driver, well, then they're probably W-2. But if the driver gets to keep it, you can try and make a case for 1099. One of the things that comes up too is there's a IRS 20-point test that they allow. It's not universal, and it changes from administration to administration, but it's a guideline, and it's not something where you have to get 11 questions or 8 questions or whatever number of questions to be W-2 or employee. It's the severity of the questions and things like that. And one of those questions is, can they work for other people? Now, I think on that one you're covered, because DOT laws, if they're leased onto you, or if they're an employee of yours or a driver of yours, they're running on your authority, I guess is what I'm saying. Those drivers can't drive for anybody else just by the DOT laws. So I wouldn't worry about that one. But again, who's got the equipment? Who's got the profit motive? Who's responsible when things go wrong? So if that motor blows on the truck, who just lost $25,000 to whatever motors cost now? If it's a trucking company, probably an employee. If it's the driver that lost 25 grand, maybe they have a case for 1099. So in general, the more that the driver is fully responsible for the gains and the losses, the more likely they are to be 1099. That's a brief summary of it. So we've given you a lot of information in about 10, 11 minutes here. What should you do? The first thing you should do is, I'll tell you, most small fleets, and that's who this podcast is for, most of these guys have drivers that should be W-2, especially drivers driving the company truck with company fuel. Company pays for the maintenance, and that's small or big fleets. Those guys are W-2, and you should pay them that way. You're never going to go wrong paying them W-2. That's never going to get you in trouble. You only get in trouble for paying them 1099. But it also gives you the opportunity to pay them per diem, which we'll talk about in future episodes, and it's all over our website at truckingpayroll.com. But you're much more likely to be able to do that, pay them per diem. It also allows you to do some things like retirement benefits for them and things like that if you want to do it. And also your turnover is going to be lower. We have the data on this. Turnover is always lower for the W-2 guys versus the 1099 guys who are driving company trucks. I will say that 1099 does seem easier, and on the books it is easier because the driver, you want to pay him 55 cents a mile and he drove 1,000 miles, it's $550, right? It's easy math. You cut him a check for $550, he's on his way. That is easier. There's no tax forms to file except for the 1099 at the end of the year, but it doesn't make it right. And so W-2 is going to be the way to go in general on these kinds of guys. Well, let's talk about one more situation before we wrap up this episode. Situation where, we talked about it earlier, the driver wants to work for you, but insists, I have to be 1099 or I will not work here. You should wish that driver well and hope that he finds some other sucker. You don't want to be that sucker. What's going to happen is, he'll even sign a form or say, I'm going to form an LLC, and you'll just pay the LLC. An LLC does not get you out of this, folks. If they're incorporated in W-2 themselves, you got a better case. But even that's dicey in this situation. But an LLC is not an entity. It's a type. It's like an option on a car. What kind of car do you have? You have a Chevy, a Ford, a Chrysler? What do you have? Oh, I have air conditioning. That's what you're saying. An LLC is air conditioning. It is a feature. It is not a type of entity, and that's very important. So they'll say, I'll form my own LLC, but you have to pay me 1099. That all sounds great until either the tax guy comes around and they're like, oh no, I didn't know anything about that. They just told me to be 1099. You're going to lose that. Even though it's garbage, you're still going to lose. Or also, a driver like this is usually trying to get away from something, some obligation, whether it's an old tax bill and they were going to garnish his wages, or a credit card bill, or a child support. Those are the most common ones that we see. And when that happens, if you were supposed to pay him W-2, all those people can come back to you that they owed money, the credit card company or the child support division or whatever, can come back to you and say, you were supposed to withhold and you didn't. This is on you. You're going to pay it now. And that's a bad day. You want to avoid that day. Your company's too small to be screwing around with this stuff. So just don't do it. You get all of the risk and the driver gets all of the reward, and they could switch it around on you anytime they want for any reason they want. And that there's no way to run your company. You you've got to demand more than that. And I know that you can. So to wrap this up, if we've got you thinking about how drivers are classified and you're not sure, we got a quiz for right on our website. If you go to truckingpayroll.com/tools, or just find the tools or resources on our front page, the third quiz there is, should your drivers be paid 1099 or W-2? We're going to ask you 6-7 questions, and then we're going to email you the results, and we'll show you a score and what it means. If you've seen all this and you're still not sure, contact us. Go to our website, truckingpayroll.com, go to the contact us page and say, I've got a question about 1099 versus W-2. If you can mention the podcast, that'd be nice too. But just ask us. We're here to help. We want to keep you out of trouble because, again, this 1099 thing seems easier, but it's not. It's not if you're not supposed to do it. If you've liked this episode, this is the first one we've ever done, so the rest of them will just get better, right? Please hit like and subscribe or follow or whatever your podcast avenue of choice is. That'll really help us spread the word to other small trucking companies like yours that need this kind of advice. And that's why we're here. The whole point of this podcast, as we talked about in the trailer, is to help you, the small trucking company, get the advice that it seems like only the big trucking companies get. And you can use it too. So next week, we're going to start talking about per diem and how it can save you money and help you keep drivers. Can't wait to get into